Hey everyone, it's Paul with the Tuesday Bold Profits. So this week I want to talk a little bit about what I do, what our team does, how folks that are subscribed to some of our services, how they are doing, how they use our services, and what you potentially can do with our services if you're a subscriber, if you're considering subscribing. So number one thing I want to put up is this chart, and this chart shows you the year-to-date returns for portfolios that are for Profits Unlimited, which is approximately what we would call our large cap service, even though in truth, it actually has a lot of smaller companies in it as well, especially when you compare it to, say, Apple and Microsoft and Amazon and others, which are trillion-dollar companies. These are huge. We've got companies that have a stock market valuation or market capitalization, as it's called, 50 billion, 70 billion, a few hundred billion. So a completely different size from like what's called mega cap companies like Apple. And many of you may be unaware that the stock price by itself has really, in some ways, very little meaning. In other words, many people purely go by the stock price. However, just understand that the stock price is simply one component of what you need to look at when you consider a company for investment. And just to provide this little bit of background so that when I bring up the issue of stock market value, market capitalization, you understand what I'm talking about. If you take a company like Apple, for example, Apple's stock market value or market capitalization is in excess of $1 trillion. It's something a little bit under $2 trillion. Now, many people may simply know the stock price for Apple. However, they have no idea that Apple has this stock market value of $1 trillion. And here's why this matters. You see, for Apple's stock to double, it would have to go from, let's say, approximately 1.7 trillion to 3.4 trillion. That's just say a lot of money that would need to come into the stock. It would also mean that in terms of Apple's business, it would mean a lot of iPhones, a lot of iPads, a lot of computers, a lot of watches, lots of that would need to come in for its sales to go up, for its profits to go up, for people to come and want to own Apple stock and pay rising and higher prices for it. So this is why stock market value or market capitalization matters. So I'm bringing this up because in this chart, let me just put this up again, you're going to see that Profits Unlimited, which is approximately what we call the large cap service. In other words, it focuses on bigger companies, companies whose stock market value or market capitalization is in the tens of billions in general, 20, 30, 50, 100 billion. Facebook, for example, is one of the companies that's in Profits Unlimited, which has a stock market value in the hundreds of billions of dollars. Many people subscribe to one of our services and they'll only pick one stock. The issue with going about using a subscription service like Profits Unlimited and only picking one stock is that, well, I can make a mistake. The stock can go down. It can be a problem stock that happens to be something that perhaps we've made a mistake on. And now you're unhappy and you're irritated and you think I'm terrible and awful and you're willing to write all sorts of nasty things about me on the internet, in the comments below, when really even subscription services, whether it be Profits Unlimited, which again is our large cap stock service that you could compare to the S&P 500, for example, which is what many people consider to be the market. And just so you understand what the S&P 500 is, it is a basket or collection or portfolio of 500 of the largest stocks by market capitalization or stock market value that trade in the United States. And this is considered by most people, professionals, investors of all kinds, to be the market. It's what all portfolios are compared to. Everyone compares their performance to the S&P 500. Whether you're a professional, whether you're an investor of any kind, this is what you focus on. And I'm bringing all this up so you can understand two things. Number one, if you ever decided to subscribe to one of our services, we always tell you to own a portfolio. If you can own the entire portfolio, I'm going to show you the benefit of that, which is that in 2020, which is a crazy year, a year that started off great. Then COVID happened and we had a crash, a really enormous crash. And we'll put this picture up again and you'll see that starting about the peak in about mid-February down to about late March, there was an enormous rapid decline in stock prices. In other words, a crash. And despite all of that, the Profits Unlimited portfolio, which on this chart is tracked based on equal weighted basis, equal weighted by dollar amount. In other words, we tell you to put an equal weighted number of dollars into each of the stock picks that are in the Profits Unlimited model portfolio. And then we use the recorded date, which is the closing price on the day that we recommend the stock into our model portfolio. And many people choose to follow along with that. In other words, they buy in approximately around the same time, around the same price. If you're generally following a model portfolio, the Profits Unlimited model portfolio is up 44%. That's right, 44% in 2020. And we obviously have some number of months left to go. And when you compare Profits Unlimited equal weighted portfolio compared to the S&P 500, which is cap weighted. In other words, the biggest companies have the highest weight. Apple, for example, has the highest weight in the S&P 500. Microsoft has the second highest weight. Companies like Amazon, Google, Facebook, and others have large weights as well. So those are the way that the S&P 500 is organized, quite different than what we suggest, guide people to when they use Profits Unlimited. In other words, if you're going to follow us, whether you're putting your money into all of the stocks that are in the Profits Unlimited model portfolio, or if you're just going to pick a few of those based on judgments that you decide to make, we tell you that the better way to actually go about doing this is to actually put equal dollar amounts into each and every stock. And we, of course, are tracking our model portfolio by putting actually $1,000. It's a model portfolio. And so these are obviously not real money. We're just tracking it using software that allows us to keep track and monitor our portfolios. The Profits Unlimited portfolio is up 44%. And here's the second reason why I'm bringing this up. Obviously, this is fantastic, phenomenal performance, and our subscribers are generally pretty thrilled as long as they have enough of these stocks to at least get this kind of performance. Some readers, of course, have selected well and have even better performance than this. Some readers have selected more poorly and have much worse performance in this. Nonetheless, we track our average performance using the equal weighted portfolio, and it is blowing away, destroying the S&P 500, and we are thrilled for our readers for that reason. So you might be thinking, well, why am I bringing all this up? Well, number one, there is something going on in the stock market that is big, that is important, and that matters to you, which is that if you look at this purple line, which says the S&P 500, which is up 8% in 2020, why is there such a big difference between the Profits Unlimited equal weighted model portfolio and the S&P 500? Well, the reason, in my judgment, in my opinion, is because we are focused exclusively on the set of stocks that we define as representing the fourth industrial revolution. Our moniker for it is America 2.0. In other words, there are companies that really reflect new technologies, innovation, new platforms, new ways of doing things that at this point in time are so different than the old ways of doing things that they are more efficient, more profitable, seeing more growth, and also are going to represent the way that the future is going to unfold. Whereas the companies that represent, let's call it America 1.0, companies of the old world, these companies have been flatlining for some time in terms of their growth. They've been struggling to grow for some period of time. They've been able to keep their stock prices rising because there is demand for their stocks because people want dividends, or else they're borrowing money from the bond market and they're buying back the stock and propping up their stock price. And then third, they're also oftentimes buying into companies to try and outrun the fact that their major businesses are in decline. And most of all, the demand for these stocks is in serious decline because the average new investor coming in wants to own companies that belong to the fourth industrial revolution, companies that belong to America 2.0, companies that belong to the new world, that represent innovation, growth, opportunity, and the future. And that is what we are focused on at Bold Profits in terms of what we tell you about in our week-to-week in this free e-letter, Bold Profits Daily, that hopefully all of you are signed up for. And there should be a little link below in the description. If you are not signed up, please sign up for it. And while I'm mentioning that, please also subscribe to this channel and give this video a thumbs up if you've liked the content that we put up. And comment below on whether or not you are invested in America 1.0 or America 2.0. Going back to my point, the reason for the outperformance, and this outperformance is quite significant, 44 to 8%, is really two different, completely different planets almost. It's really 5x what the S&P 500. And that's because every single company in Profits Unlimited, every single company in the model portfolio in Profits Unlimited belongs to the fourth industrial revolution, belongs to America 2.0, belongs to the new world. And they are seeing investors come in and buy their stock and bid it up because investors are always future focused. They are looking forward. And they see that these companies represent the future. These companies are the way that the world is going to unfold. They represent the solutions of the future. And because of that, they represent the best growth opportunities in the future. And they are bidding these stock prices higher. So this is the reason why there's this huge outperformance between our portfolios. Profits Unlimited is just one of them. I've got two of our other portfolios listed. True Momentum is our mid-cap service. These are stocks that have a market capitalization somewhere in excess of $2 to $3 billion. So something that's higher than $2 to $3 billion. And you can see that model portfolio that's tracked on the same basis that I mentioned before, equal weighted based on the day that we recommended into our model portfolio. That portfolio is up 54% this year, 54%. That's right. So many times the S&P 500. And once again, the reasons are the same. We focus exclusively, laser focus on the fourth industrial revolution, on America 2.0, on the new world, on generally new companies that have new ways of doing things. And also as a result, are also getting all the new money that's coming into the stock market wants to buy these kinds of stocks. These stocks that are exposed to the fourth industrial revolution in America 2.0. And the last portfolio, which is the one in green, True Momentum, as you can see, is in red, 54%, is our Extreme Fortunes portfolio, which is our small cap service, which is up 78%. And actually a couple of weeks ago, prior to the recent sell-off, it was up as much as 90+%. And this is up 78%. And this exclusively focuses off fourth industrial revolution, America 2.0. However, much smaller companies, generally under $3 or under $2 billion, much smaller companies. Most of these companies have stock market values, market capitalizations of 200 or 300 million, 400 million, 500 million. And this is generally the place where you see the maximum growth, maximum innovation, and where the next Amazon, the next Google, the next Netflix, the next Tesla is going to come out of. All of these companies generally start in some small way, either in the private or in the public markets. And then as they experience success, as their financial success grows, they grow into bigger and bigger companies. That was the pathway for all the big companies that exist today, whether it be Apple or Microsoft. At one point in time, they were either small companies that would have gone into Extreme Fortunes, mid-sized companies that have gone to True Momentum, or slightly bigger companies that we currently have in Profits Unlimited. And this is where the next Apple is going to come from. This is where the next Microsoft is going to come from. This is where the next Google is going to come from. And if you're interested in any of these kinds of opportunities, whether small companies that are exposed to the fourth industrial revolution, mid-sized companies that are exposed to America 2.0, or bigger companies that are exposed to all of these megatrends, the technology megatrends, Internet of Things, artificial intelligence, blockchain, and where you can capture the maximum growth, maximum opportunity, you should try out one of our services and check it out and see if this is right for you. And if you do it, I highly recommend that you take a portfolio approach rather than what many folks choose to do and have much worse results than what I've been showing you in this video. In other words, they have a stock that may or may not go up. Maybe it goes up a lot. However, if they pick the wrong stock, they have to go down. And just remember, the S&P 500, which is the market, is a portfolio. Pretty much every ETF that many people will talk about or compare performance to is a portfolio. It has 30 or 40 or 50 stocks in it. Every mutual fund is a portfolio. Most people's accounts are a portfolio. That is the smart way to go about investing in the stock market. Build a portfolio. It gives you many ways to win, many chances to win. It is less volatile, and ultimately also allows you to have so many different shots on goal. And on any given day when the market has gone down, like for example, yesterday, the market was down 1 or 2%, you have so many different stocks, at least some of them are going down a little bit less than the other. And that makes it a little bit easier to stay in the stock market. So this video is just to show you what a laser focus, a hyper focus on the fourth industrial revolution, America 2.0, innovation, megatrends can do in terms of performance in a very, very volatile year. And if you're interested in any of our portfolios, please check out the links below. It will send you to a page where we'll give you greater descriptions of this portfolio, and also where you can join Bold Profits and Profits Unlimited, and also links to some of our other services. So that's my video for this week, and I'll have another one for you next week. Until then, this is Paul saying bye.